Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video I'm going to be taking you through the week ahead analysis. We're going to go through some news, strength meter and some charts to look out for. So going to start off here with the news releases. We don't really see any news releases Monday or Tuesday, any of that of high impact. There might be some medium impact, but high impact there's nothing. We then come to Wednesday where we have some really important data. We have CPI data out of the US, and it's looking, or forecasts are suggesting, that we're going to see a little bit of a decline from previous. Now, if we know anything about US data at the moment, it's that it usually is jumping above these forecasts here. So we could actually see some strong CPI numbers here for the US at the moment. So be interesting to see how these come out, but very important data there, 130. I think if we beat estimates here, the dollar strength that we saw towards the end of last week could continue into the market. We then have PPI data following that. Again, similar scenario. I think if we were to jump forecasts, we could see a positivity for the dollar. We do have some GDP data out of the UK, which is showing a potential negative move, and that is month on month, but the preliminaries for quarter on quarter, and that is potentially going to show us a bit of a slowdown. So we could still see a little bit more of a decline to the pound, although we do quite like where pound dollar is sitting at the moment. We then finished the week off with some consumer sentiment, and it's looking to come in a little bit above previous. So not too much in the way of high impact data. Usually when we do have really large high impact weeks, we usually see the dollar have a bit more of an influence on the market. We do have a lot of dollar data this week, so that could still happen, but usually lighter high impact weeks can often see the dollar underperform slightly. So it'd be interesting to see how this does shape up this week. Going on to the strength meter, the only thing that really stands out for me is the yen coming into reversal areas. We've already seen the yen start to weaken off from previous areas of support, so this being at a reversal zone now makes sense because we can start potentially looking for that yen to weaken again slightly. Nothing else really takes my fancy here. We have a lot of sort of mixed opportunities at the moment, a lot of them in the center. We don't really have any of them towards the lows. The only one thing that we can look at is potentially still euro was bouncing up a little bit, but I still think that the euro has some way to go just yet. Looking at the pound then, so I've put the weekly chart on the left hand side, daily chart on the right hand side. Reason being is because I just want to show you what we're looking at. And we were talking about this downward trend. We were also talking about this potential head and shoulders pattern. Now, the monthly closed as a strong sort of bullish pin candle, and that to me suggests that we could see some further upside. However, when a monthly goes from being into a sort of retracement phase back into an impulsive phase, let's just say down here for instance, when the market changes, what we see is a change of trend. That can come in the form of a sort of double bottom pattern. It can come in the form of an inverse head and shoulders pattern. Now, if I was looking at the weekly chart here, do we have that just yet? No, we don't. Price is still technically making lower lows and lower highs. So we don't have the reversal set up yet. Obviously, we can try and get clues from lower time frames. So you can see here, maybe 1.2 is going to be retested this week for a move up. But if I would say price comes and tests that 1.2 this week and we close back within last week's range, let's say we form a nice tail to the downside, bit of a bullish close, that could be the higher low potential for that reversal. Okay, nothing's really going to confirm until it breaks the high at 1.23. So we've still got opportunities for pound basically to continue to push to the downside, because we may still get a retest on a double bottom pattern. Is what I'm trying to essentially say is, I think being long pound is fairly aggressive. I would be happy to be aggressive above 123s. I think if we break 123s, that's when you're going to be sort of looking for opportunities to get to 126s. However, at the moment, I still feel like we may get a little bit of a push down. So that may be a little bit of a lower high coming in, and then we move back down towards these lows and things like that. So be a little bit careful with this week. Watch your basically your lower time frame trend here could be sort of enticing you to be a buyer because of that head and shoulders, but just be aware that the weekly downtrend is down. So going on to dollar yen, we've got the opposite. Weekly trend is up, bullish. Weekly close could signify an impulsive phase back to the highs. What's happened on our 4-hour time frame? While we were trending to the downside, we were talking about remaining short until price took these highs out. We broke through those highs, so now we have a higher high pattern, which makes me think that we could pull back to the downside and maybe try and retest 137, or even all the way back up to sort of the 138.50s just through here. So depending on how that dollar is influenced by the news this week, we could see a pullback down to 133.50. Buyers start coming back in here. Could see an extended move back to the 137s. If we break that, we have the 138.50s to contend with. Going on to the S&P 500 then, quite like the S&P 500 where that's sitting. Look at this nice low ranging week back at previous resistance. So you got support, resistance, resistance. 4,200 is the level for me that's I'm keenly interested in. Is price going to trade above these highs? I think if we open, trade above, close back within, we've got a potential for price to pull back down towards this 3,900 area. On the 4-hour time frame, you can see that price, I think the key area for me is down here at 4,080, but you can see price is making higher highs, higher lows. We consolidated, broke to the downside. That to me is a little bit of an idea that we could still see a push to the lows. I think if we take out 4,080, we've got a little bit more of a sign that sellers are getting aggressive here, and we could see that move back to 3,900. Or at least these lows at 39.21. So keeping an eye on the S&P 500. Obviously, if all the sort of dollar news comes in and it's taken in a positive way, we could see price, break above this area. But history has told us that, when we do get the inflationary data out of the US, if it is positive, we've had a negative reaction on the stock markets because it's likely going to push the Fed into hiking more aggressively. And, that could be a bad sign for the stock markets. Obviously, as you hike interest rates, employment comes down and things like that. So although obviously the last jobs number was actually pretty good, so quite an interesting shape up here. I think if we can stay below the 4,200s, we'll probably trade back down to the 39.21s. A break above 4,200, you've got to move potentially to 46. So keep an eye out on those two levels. I featured oil here. This isn't actually a weekly chart. This is actually a monthly chart. I should have corrected that there, but this is a monthly chart. This is and this is also not a 4-hour chart. I forgot to change the title there. This is actually a daily chart. Okay. Now, what's interesting about this? I've been talking about. I think we talked about shorting oil around these type of areas up here because of this negative weekly close. We did a video on oil a couple of months ago, and this just kind of cements my theory in lower time frame trends in higher time frame impulses and retracement phases. So we have a retracement phase here, an impulsive phase, and a retracement phase. Now you can notice here on the daily chart that when price is in the impulsive phase, we make higher highs and higher lows. Once price took that low out through there, started to make a lower low, give us that bearish close, we could have seen a retracement phase, and we did. Price started to make lower lows and lower highs, and most recently we're starting to break through this area through here. Now, why am I drawing your attention to this? Well, we're coming back into a key price structure. So 85.44 is not just the previous high on this monthly chart in terms of trend, but it's also last year's high. Okay, so very significant level in the market. It was the high of the previous year. So I think if price actually comes back into this area here, maybe forms a bit of a double bottom pattern, again look for the higher low to come into play, we could start to see oil prices starting to creep up. Now we could still see a bit more of a move down. We've got these lows here that if price ignores last year's high, we could come to $68, but overall we're in a very strong upward trend here on oil. So that level there is going to be very interesting to me going forward. So I think, you know, even if we pull back a little bit first, we may get some short-term selling opportunities back down to the 85.44, but I'll be looking around here for buyers to start stepping back into the market. So I hope you enjoyed this video update. If you did, leave this one a thumbs up, subscribe to the YouTube channel to see some more Forex trading content, and I will speak to you in the next video.